So now on to mortgaging. Excellent. So a lot of the people who watch this show, like when I teased it to our watchers, they were very excited. As a matter of fact, I called a friend of mine about it, and his voice was going up a few octaves because mortgages are very touchy in Nigeria because the general perception is if you don't have mortgage,
unattainable.
Nobody can get mortgage in Nigeria. So down to the question, can you get a mortgage in Nigeria?
Very, very good question, and I think it's a good topic of discussion that we're having. Right? The simple answer is yes. Right? You can get mortgages in Nigeria. Why don't people get mortgages in Nigeria? Why has it become like a major lifestyle thing for Nigerians, especially younger Nigerians, which may be watching this? I would say a lack of information, and a lack of information, but also a lack of financial literacy, right? Because if people were really informed about the benefits of a mortgage and how much it can save you in the long term, then people will actually be looking for how to access mortgages. But I think that's why we're having this discussion. So we're going to break down some of these things and see how one can access a mortgage and what benefits accrue to you by getting a mortgage. Yeah.
Okay, so a lot of it will be heated, but that's just financial literacy. So let us start
No offense.
with the commercial mortgages. How can I get a standard commercial mortgage? What's the process? What are the rates? And what's applicable?
I think in trying to answer that question, I would like you to kind of redefine what you mean by a commercial mortgage. Two things I'm thinking about. Commercial mortgage in the sense of an individual that wants to maybe buy into maybe a block of apartments, right? Maybe multiple apartments, basically, and wants to use it for investment purposes. It could also be an individual trying to get some retail assets, right? Shopping spaces and stuff like that. I want to take a commercial mortgage for that reason.
Right.
Or it could be that somebody's taking a mortgage to buy a single property at the prevailing commercial rate. So I want you to kind of explain what
the latter.
Okay.
The latter.
Okay, which is
so a common retail mortgage for an individual person. That's what you're asking, right?
So basically, I want to buy a house.
Okay,
a house. I mortgage to buy a house.
Okay,
basically.
Okay, so if an individual is trying to get a commercial mortgage, it's very possible, but I would say also a bit expensive, right? Why is that? Because the commercial mortgage is driven by the CBN rates, right? Especially a lot of the primary mortgage institutions in Nigeria source their funding from a general pool, right? If that general pool has pegged the interest rate at a particular amount, which right now in Nigeria is a bit crazy.
That's the NPR, right?
Yes, NPR. Then what the mortgage bank would naturally do is just put a little markup there and then give out such a mortgage. So in Nigeria or in Lagos, because we're speaking from Lagos now, if an individual is looking for a commercial mortgage, you'd be looking at rates to the tune of 26 to 30%.
Okay.
Right. And some could be higher, right? Depending on the nature of property you're trying to buy and the risk involved and all of that. So that's what the commercial mortgage looks like now.
Can I ask a question? You said so mortgage institutions and banks get their funds from a pool. Now, what is their relationship with central bank vis-a-vis source of funds?
Okay.
I mean, the central bank would define rates by NPR, but how do they get mortgage funds?
Okay, so
central bank fund mortgage banks.
Okay, so the relationship with between mortgage banks or mortgage institutions and central bank is one of a supervisory role. So all the mortgage banks in Nigeria are given their license by the Central Bank of Nigeria, which wasn't always the case. There was the Federal Housing Authority that gave licenses to mortgage banks before, but now everything has become uniform. So we're all reporting to the Central Bank of Nigeria. So in terms of financing and funding, what the central bank or that mortgage landscape does is that the funding given to the mortgage banks right now would be coming from the Federal Mortgage Bank of Nigeria, right, which is the National Housing Fund. So anything in terms of funding for mortgage banks coming from the central bank is through Federal Mortgage Bank, which is a single-digit interest rate loan. The NHF is 6% still.
Right. Yeah.
And the maximum they would give per individual will be 50 million. Right, so it recently was reviewed from 15 million cap to 50 million now.
Yeah,
Okay.
yeah.
We'll get to that after,
Yeah.
but I want us to to cover the commercial rates. So basically, if the rates are between 26% to 30%, and the question is, how many people can afford
this? Okay, so this is speaking from maybe experience of clients, right? Recently, why would somebody go for a mortgage of 26%?
Exactly.
Or it could be because they don't want to miss out on an opportunity, right? You see a particular property, and I mean, it's what you want to get. It could be your wife Ginger, and you're like, we need to get this property, or so and so just moved into this estate and they got a good deal. I think we should do that as well. And whoever is trying to get this property may feel like, okay, I can get these funds to pay for this property, but maybe just not right now, right? So, or they know that, okay, if they work towards a structure, within 2-3 years they would get that money, right? So to stop gap, right? Really, a lot of people come in for a mortgage. Maybe they take a 10-year, 15-year tenure, right? And before that time elapses, they may have gotten the funds that they need. But commercial mortgages, sometimes people take it as a stopgap. Some people also may be buying a property for investment purposes, right? And they know that the business they want to do with that particular property or that set of properties is going to yield them something that they can use to pay back the repayment, right? And then some. So that could be, people may be thinking about it from an investment perspective as well. Some people are just boxed up, right? And they can afford it. Yeah.
What about the corporates? So I'm
Corporates.
curious if corporates take these kinds of mortgages, or even mortgages at all,
When you say corporate, what do you mean?
as in a corporate
Company.
entity.
Okay, so in terms of financing for real estate, there are a couple of things that we may need to look at. A corporate entity may be taking funds to build and develop, right? They may not be going for this 26%, right? There's some relationship that the mortgage banks have with other institutions apart from Federal Mortgage Bank, right? Like the Family Homes Fund, right? Like NMRC, like all those other financing institutions. So they may be able to source for funds at a lower rate than this, right? So if people are looking at constructing estates, building estates, cooperatives that want to develop estates, they'll be going for maybe a cooperative loan,
Okay.
right? To be looking at between 10 to 12%.
Oh, really?
Interest, yeah.
Okay.
So yeah, it could be, we get cheaper funding for corporates that are trying to build and develop. What that would look like is that the cooperatives or the companies would take the loan, build and develop maybe between 2 to 3 years, right? But on the premise that they're getting mortgage subscribers, people buying into their houses that are going to take mortgages, right? So let's just play around with figures.
Yeah.
So if the corporate has taken 300 million, right, they could say we're bringing 10 people that are going to take 30 million naira mortgages individually. So 10 people covers at 30 million. So when they finish building developing, and they hand over the keys to the subscriber or the tenant. He's not a tenant now because he has bought to the homeowner. The liability shifts from the builder or developer or the cooperative to the individual now. So the individual now takes a longer term mortgage, which could now be the National Housing Fund, right? They'll just take a 30 million naira mortgage for 10 years, 20 years at a single digit interest rate.
And to qualify, naturally, there, as we understand it, I mean, how do you qualify? You have to contribute to a fund.
Yes.
To the National Housing Fund, or if it were a cooperative investment or fund.
Yeah, so to qualify for the NHF loan,
yes,
individuals need to be contributing to the NHF scheme, right? Which I think was last year.
Minimum 6 months, they say.
Yeah, minimum of 6 months. So I think about last year, the government made it optional. So
to
people
contribute.
People don't need to contribute directly from source. So it was like, before it was like paying taxes.
Yeah.
Immediately you get your payroll, you take away the payee, you take away the pension, you also take the NHF. So it was mandatory for companies to pay
your NHF.
Yeah, your NHF. But now people can opt to
opt in.
Opt in or opt out.
Okay.
Right? So, but you have to be contributing as at the time of your application if you want to gain access to this on National Housing Fund.
Sorry, can I ask, in your experience of issuing mortgage loans, especially in Nigeria, what's the average loan duration or mortgage
loan
tenure?
Duration, so I would say 10 to 15 years.
10 to 15 years.
15 years. But there are some that could be much longer. That could be shorter. 10.
Okay, so I mean, the biggest challenge in our experience in real estate for the purchasing of homes or any other property, I mean, if you ask me, in our experience of out of 100, I'd say 1% has used a mortgage. Meaning 1 out of 100 transactions has been a mortgage-based transaction. And the obvious question is why? And the obvious answer is interest rates. What's your take on the interest rates, and what would you recommend is the most ideal interest rate level for a mortgage loan?
This is a tricky question. So the interest rate has been a challenge. Can't fault that, but it's a simple reason, right? Because you're cheap. You're sourcing capital. So the higher the interest rate on the capital you source, the higher, I mean, you just have to put a markup on that.
Yeah.
Right. So that has been a bottleneck for people taking commercial mortgages. On the flip side, people taking the National Housing Fund, I think maybe the administration of it has not been as seamless as people would expect. So it takes a bit more time than a regular, you just walk into a bank and apply for a loan, and within 1 to 2 weeks, you should get approval and then disbursement. So people that are taking the NHF need to wait a bit.
What's that wait time like now?
So, I mean, we tell clients between 6 months to 12 months.
Wow.
Okay, 6 months to 12 months. And that's why it makes a lot of sense for people to key into it if you're going for a project. Right? But if you have an agreement with your developer or realtor that I want to pay in installments, then you can work towards the NHF being the final payment.
Right.
Yeah. So to answer your question directly, what I feel will be the ideal interest rate, maybe between that 6 to 10%. 6 to 10%. If it's
single digits, at
single
least.
digit.
Single digit.
Single digit. That's the way it makes sense.
Yes.
That's the way if you want to bring more people into the pool, right, which is really what we're talking about today.
Yeah.
By increasing that interest rates, some people have been squeezed out of even considering a mortgage because you're thinking about how am I going to pay for this with the high cost of living.
Yes.
in Nigeria as well. If we really want to see a lot more people participate, right, it has to be squeezed down to about 6 to 12%.
Okay.
Being realistic. Yeah.
Okay.
So let's go to like the National Housing Fund. Who qualifies for that? Like in terms of age, how old do you have to be to apply, and how much do you have to earn a minimum income to
So
apply?
the Act stipulates that an individual should be about 21 years
Okay.
before you can apply. How much the person's to be earning, I don't think you can put a peg on it, right? Because it could also, the question could also be how much do they need, right? I know we're talking about the maximum
Capital being 50.
50 now, but some people are still taking, 3 million, 5 million, 10 million, case maybe.
Yeah.
Or they're not taking it because that's what they want, but that's what they can afford. So the way the system works is that your profile according to your earnings.
Okay.
So what you can afford is what they would give you. So not everybody will be able to take the 50 million. But if you can afford it, they would profile you and then get you.
Okay.
So who can access it once you're 21? And also once you're contributing to the NHF scheme, right, as he said, for a period of 6 months, then you are eligible to apply.
So when you apply, can you give us a quick step-by-step process, and what are the applicable fees for any of our audience that likes looking at mortgages right now? Yeah.
Okay, so if an individual is interested in a mortgage, one of the first things they'll need to do is to identify a property. They'll need to see, okay, maybe they're keen into this estate or that estate, and this is the offer price. So they'll need to get an offer from a vendor that's willing to sell to them. It doesn't have to be an estate. It could be an individual just looking to dispose their property. So they come to us, right? And we'll do an assessment, see the title documents of that property. Because one of the key things that drives mortgages is collateral, of course. All right. So no bank would want to give a mortgage or a loan to an individual that has maybe a faulty title, right? Or they haven't perfected or registered the title of that property. So we do all that due diligence, right? We do a search, do evaluation of the property. If it adds up, then the profile of the customer and see, okay, based on what you earn, you're not going to use all of your money to pay back a loan. That would be criminal on our part. Right? So we try to advise customers, right? Okay, that based on your earnings, and we're flexible.
Is there a KYC form you guys go with to profile it?
Okay. Form, profile the customer.
Yeah.
And then just assess all the earnings of the customer, because some people, they work in 9 to 5, but their side hustle is actually their main hustle.
It brings more income.
It brings in more income, basically.
Yeah.
So we look at the earnings holistically, right? And see, okay, based on this person's monthly income, how much can they afford? And we're flexible enough to also look at, there might be people that have earnings that are seasonal, right? Or they may get bonuses at a particular time and they want to consider that for maybe an annual payment or something like that. So we look at all of that, profile the customer and give the customer like a provisional offer. Okay, this is how much we think you can afford. Can you, so let's say the property was 30 million, right? And they came in for a 20 million mortgage, right? So what that would mean was that they have to have 10 million either saved, or they found a way that they're going to sort out that 10 million. If they come to us and what they can afford from our own estimation is only 15 million, right? We'll let them know. We'll say, okay, this gap of 5 million, like, how do you want to sort it out? If they're able to, then we proceed with the mortgage application. So we basically assess them, let them know how much they can afford, get all the necessary documentation, do the due diligence, and then submit the application.
Okay. And if they if they accept and they're complying with terms. I'm just curious about the property registration leg. Naturally, if a property of interest is not yet registered, would the mortgage institute consider lending against it if they do the
legal mortgage.
deed of legal mortgage on that property? I'm just curious as to that legal aspects, especially with title that's not yet registered, because a lot of the country, a lot of the states, they have title that is not yet registered in some cases. Some people have title that's fine, but they haven't registered it and they don't know how to go about it.
Yeah.
And so, yeah, I think this might be informative.
Okay. So I think the title aspect of things when it comes to a mortgage is actually very key. The key driver of mortgages in Nigeria. But because we're working in the Nigerian landscape, we always try to not just put a bar for customers, but always look at, okay, how can we solve whatever challenge they may be? So for a property that maybe there's some issue in terms of the registration. So let's give an example for it to make sense. There's an estate along Chevron axis, right? And in that estate of maybe 50 units, somebody also bought the unit, right, from the estate. So the title is in favor of the estate, right?
Yes.
So the person has bought maybe outrightly, right, and was given a deed of assignment from the estate. And so along the line, maybe the person decides, I'm not feeling Nigeria anymore. I want to Japa, and they want to dispose that particular property. So they bring it to our client, right? Okay, we're giving you an offer for this property. This is the amount, and we're willing to sell it to you, right? And we'll negotiate how the payment will be structured. So the customer comes to us, right, because we're very reliable. So come to us, we discuss about it, and in terms of doing the due diligence, we find out that the person selling to this customer actually has a title, has property documents, right, but has not registered it, right? So what's the challenge there? The challenge could be that somebody comes tomorrow and says, it wasn't OJ that actually bought this property, it was actually you.
Sure.
Right. So to secure ourselves, we want a situation where we can get commitment from
The issuer.
Right? That okay, they would be willing to issue a new deed of assignment to this person that is buying from us. So if we can get comfort and confidence from the original title holder,
Yes,
we can then work out
a legal transfer.
Yes,
Yeah.
how it should work. But it's important that you raise that question, because title documentation, title registration, and perfection is actually a major bottleneck in transactions in real estate in Nigeria.
I'm just curious, like randomly. So, as a business, which aspect of your business would you say is number one? Would you say is the National Housing Fund bit, or is the regular mortgage bit given to residential buyers or cooperative buyers?
Okay, so what we try to do is a good blend of everything, right? Because in Nigeria, you don't put all your eggs in one basket. The thing about the National Housing Fund is that it's the cheapest fund you can get out there, right? So it makes it very attractive for customers. So we try to encourage as many people to key into it as possible, because there are some people that have been contributing to it for all their lives and they've never even heard of how they can access it. Right? So your money is just basically going. So every Nigerian has the opportunity to access that fund, and you should take advantage of it.
On that note, can I ask, again, if you might know, is there a way now to check if you have been contributing and you are not aware that maybe your employer has been contributing to an NHF fund for you?
Yeah.
Is there a way of contacting the NHF, providing some sort of details to try?
Yes. So we have a good rapport with the Federal Mortgage Bank of Nigeria, who is basically in charge of administering the National Housing Fund. So these are the custodians of every contribution that an individual makes or a corporate makes on behalf of a client. So we could, get across to the Federal Mortgage Bank with your details and find out, okay, have they been contributing for you? Because there are some people, unfortunately, that deduct it from your pay, but never remits to Federal Mortgage Bank. So you can actually find out and know what your balance is, right? Even in the your NHF balance, basically.
Is it possible to do that online, or you need to go through some
So
agency?
it's possible to make that inquiry on the Federal Mortgage Bank of Nigeria website,
Right.
but if you want to get a fast answer, you need to maybe either visit in person or just through your primary mortgage institution, make that inquiry, and within a day you can get that information. Yeah. So we do a bit of not a bit of everything, a bit of the bits that we feel are important to our business, right? Because construction is important, because without construction there's no supply of the houses that we need to give mortgages. So that's very important to us. Commercial loans as well, because you can't just wholly rely on
one segment,
and you can also be a bit disappointed because of the timeline for the NHF. So we try and see how we can source funding to help our customers access commercial loans as well.
So where do we see the future of mortgages in Nigeria? How can we? I think the general question on everybody's mind, certainly in my mind, is that how can we expand that net outside of the National Housing Fund? Because like what I understand about the National Housing Fund is that you can only access it once for one property in your lifetime. So I can't buy multiple properties on the National Housing Fund, unfortunately. So for me, I'm all about, okay, how can we expand the mortgage net in Nigeria? Because how can the average person who has a corporate job have a mortgage for multiple units? It doesn't just have to be one, because obviously, as you know, internationally, you have people with multiple homes. However, they're all mortgage are refinanced. We'll put it here, put that one here. So how can we get to that point?
No, internationally, some places, depending on where you are, will put certain restrictions on the type of financing you can get for first time buyer versus a second or third property. But I want to answer your question and take us to to two places.
Okay.
One is interest rates. We'll go back there. Two is general economic income, because those two factors, I believe, strongly contribute to the inaccessibility and unaffordability of mortgages. We interest rates is very clear, and single digits below 10% is what is anything beyond that becomes, it goes into territories of unfeasibility, financial infeasibility effect. I was going to ask, but I'm not sure you will answer your question about what's the level of default rate at this level of interest. On mortgages, if for people that have taken it. But of course, it will also depend to what level of finance they were exposed and so on. And I'll allow you to contribute to this, but the second one being general income. So if income in the country is not growing, and we know that, again, what grows last, people's wages and, so on, maybe not just wages, but general income. Then even a 0% interest rate might struggle, because if we continue seeing a inflation environment and flat wage growth, for example, or income growth, then we're really talking about real recession for income earners. And it doesn't matter what the interest rate you get at that time, they will not be able to pay back the value of that house. But sorry, what are your thoughts on, to OJ's question, like on the future of
where do we go
mortgage market?
Can we expand
those two things, especially interest rates?
Very thoughtful questions. And I get a sense of frustration even in some of those questions, right? Because we would really like to see a situation where, it's like very easy, very accessible for customers, the same way it is like in places like the UK, the US. Like, once I'm done with school, start work, I just looking forward to getting a mortgage, getting my first house and stuff like that. So it's like clockwork for a lot of people outside this space. But everything that we anticipate some level of change in needs to be attended to, right? And I think I'm not an advocate for any party or anything, but sometimes there needs to be government intervention in some of these things, right? And I think they're trying to do some things with the Renewed Hope estates and stuff like that. I don't know when this will be published, but they're looking at doing some units in Lagos as well. They've started some things in Abuja, places like Nasarawa, which are really affordable houses. And the plan is to get people on mortgages to access these houses. So they're coming to Lagos as well to do in some locations, right? So the idea really will be people won't necessarily have to pay outrightly. We'll be able to get affordable loans to buy those units. So the sector needs some attention as well, right? Maybe I'll go a bit forward and come back a bit to the interest questions that you asked. One of the major challenges is this title issue, because if you want a lot of transactions to happen, you need to look at, okay, what are the bottlenecks not allowing transactions to be consummated in a timely fashion? And one of the things that we said is title, right? If you buy a property and you want to offload it, it should be seamless, right? But unfortunately, in places like Lagos, where we are, it takes some time. When you buy your property, you take it to the lands registry, and there's some politics before your application is even attended to, talk less of it being registered. So registrations drag on for a long time and stuff like that. So that's one of the challenges that the sector is facing, right? Because digitization should be where we're going to. Just to answer your question, where we see the mortgage sector going to. Digitization, if we can have a system where people can buy, get it registered, sell at will, it will really help. Then in terms of the interest rates, there are a lot of people coming into the market now. I've mentioned something called the Family Home Fund, right? Those are interventions that are coming in, trying to get the rates to single digits.
Okay.
Right, trying to get the rates to single digits.
And that like a policy campaign or
No. So what they are doing is that they're actually sourcing funding. They're sourcing funding, and they have a goal for affordable housing, which I don't know how we interpret that.
That's another question.
They have a
What's
cap.
affordable housing?
They have a cap, though. I think 35 million is the.
This affordable housing.
No, is the max property value that they would be looking to give a mortgage for. So they administer their mortgage through primary mortgage institutions like us.
Okay.
Right. So if an individual has a property within that limit, right, and it has a good title and everything, they can actually come in, provide financing for a mortgage for that individual. So those kind of interventions are actually very necessary if you want to see more mortgages happening, and that is happening.
But at what price? And is there a subsidized interest rate or?
Yes, very subsidized interest rate. There are people that have gotten 10%.
Okay.
10%, and
What's the difference between the Family Homes Fund and the National Housing Fund?
So the National Housing Fund is government driven.
Okay.
There's something called the NHF Act. So it was actually passed into law, right, to drive affordable houses. So the NHF is being run by a company called Federal Mortgage Bank of Nigeria. right? So they are the ones that administer it. So
Mhm.
Family Homes Fund is a different institution entirely,
Uh-huh.
right? So what they are also focusing on, in line with the SDGs and all of these things, is bringing affordable housing to places, like developing countries, like, but now in question Nigeria, right? So they are providing part financing, right, for mortgages in Nigeria.
Oh, so the Family Homes Fund isn't a Nigerian institution.
It is. So what I mean by
Because their funders might not.
is yes.
The
They source funds
okay.
from
And
a
they're
wide.
private, they're not public.
I think they are private, yes.
Okay.
They're private, yes. There's also the Nigerian Mortgage Refinance Company, right?
Okay.
So how does that affect the sector? Because I want to speak to your questions holistically. The Nigerian Mortgage Refinancing Company is important because people can take a commercial mortgage, right? And if the mortgage banks are not able to get cheaper funding, the rates will just keep going higher. What the Nigerian Mortgage Refinancing Company has done and is doing is for mortgages that are performing, right? They're saying, okay, you guys come to us with these mortgages, right? And we can refinance the mortgages basically. If the mortgage is 50 million, we can refinance it for you. If you gave it at 29%, we can bring it
Down to
somewhere in the
20 or
middle.
something.
Yes,
Yeah.
for you. So what that does is that it helps
Reduce default.
yes, it
Some.
helps reduce default rate, but it also helps the mortgage bank to have cheaper funds that they can give out in terms of more mortgages, right? Because you give out mortgages, but if you want to give out more mortgages, you need to source for more capital, right? But if you have a situation where when you give out a mortgage, you can get it refinanced, right, for a lower amount, then you can then give that out as a mortgage again. So it's a continuum that gives the mortgage banks more liquidity to give out more mortgages to prospective clients. But ultimately, what will bring down the interest rates is country has to develop. Country has to develop.
Yeah, well, I mean, the country will. My when people say that to me, I say the country won't develop at 29% interest rate. If, for example, we are trying to finance our development locally, we know we always look at ourselves as needing to raise money as a nation, and all nations, and not just Nigeria. Everybody needs to raise money. But if there were islands in the sea of planets called Nigeria, and there was a planet called Nigeria, there's no way you're raising money from but yourself. And so in such scenarios, my gripe is always with CBN. So there are two factors. CBN is the regulator of rates. So as far as where our rates are and why that is a direct opposition to growth in many sectors, especially mortgage markets, is obvious. It's no longer affordable at this interest rate. It wasn't even affordable at half the interest rate. And the argument for why interest rates are this high in our country are not convincing enough to me. One, we are not fighting inflation. Let's stop kidding ourselves. If we were, we will have the lowest inflation in the world right now, but we don't. Two,
Why do you say? I just want to get like your thoughts on that point. Like we're not fighting inflation. How do you mean? Like in what sense?
Well, the conventional thinking about why interest rates reduce inflation is that you have excess liquidity being naira in the market. Now, it will be a longer debate to have an empirical data about how much naira is in the market. But it's not the only factor that contributes to inflation. Supply issues contribute to inflation. You know, if you have a fixed amount of liquidity in the market and you are pulling out, if there isn't enough production, then you'll have inflation. And also fiscal irresponsibility, a government that wastes money. Okay, you have a budget of X amount and you wasted 30% of it on non-productive elements, whether it be interest payments or serious waste, just non-production. And then we have some level of imported inflation, being that energy costs around the world went up. We can talk about the reasons, but it did, and it affected everything because it bled into everything. And so therefore, when a country in such a scenario that's already at 20-something% interest rate says that they are increasing interest rates to fight inflation, they know themselves that at least we should be aware that that policy is not going to change what the causes of inflation are. And it's kind of a thing where a central bank would tell you, well, we're autonomous. We can't help with the fiscal irresponsibility. That's true. That's fair. It's not their responsibility. They will tell you, we can't do anything but to compete with the actual inflation rate, because if you have inflation at a certain level and it starts to get higher than interest rates, they will say that we are in devaluation and therefore negative growth. Because, now everybody has to make, if inflation is at 20%, everybody's business has to return 30%. Right. And woe betide you if you have any mortgage or any loan, because you've got to now make 20% to beat inflation and then 30% to beat interest rate, depending on your exposure of debt. So that's not helping growth either. Our interest rate at this level, at double digit, is not helping inflation and it's not helping growth. In fact, the fact that it's going higher when our growth needs to grow more to improve production and to kind of have some sort of stagnation of price increase or deflation effect, interest rates going up won't help. Now, someone could argue that like Nigeria is not a highly financialized market in the sense that, so these interest rates aren't directly contributing to a lot of product inflation. That's debatable. Highly. I'm sure it is. I'm sure some of the big names, some of the big conglomerates in Nigeria that are making some of the staple foods that go out to the everyday man on the streets, that he's seeing inflation. We'll wonder about, well, yes, I'll agree that it's more energy driven than interest rates, but look inside, interest rate will be there too. So my overall view has always been against this level of interest rates for our country, any developing country, really. We can argue about the causes or why they believe this policy should be pursued. One of them, by the way, is that with higher interest rate, you retain a bit more capital investment because it's combined with the liquidity argument that, okay, people will stop putting their money in the open market and put in a fixed income and savings, and they will reduce the liquidity and reduce inflation as well. And the other the problem with that is the byproduct is that you have less economic activity and therefore less economic growth in a time when you need more. So, interest rates for the mortgage market must see reform, complete reform for me. Down to, as you said, single digits. It's not something we should shock our economy into doing in 1 year or 2 years, but it has to be a visionary program to say.
And there should be a roadmap.
Yes.
Is there?
There's a lot of discussion going on. I can tell that for sure. Because we have principals that we speak with almost on a monthly basis, from CBN, from Federal Mortgage Bank as well, from the Ministry of Housing as well. And they're always racking their brain as to, okay, what are the next steps that we can take and so on. But as we've all mentioned, it's not going to be a snap of the finger kind of thing. A lot of tough, maybe decisions that may need to be taken to get there. And if the powers that be will allow that to happen, right? But hopefully we get there.
Yeah. No, I think it's got to be political will at some
Yeah,
point
yeah.
because an administration is coming and say, okay, well, this is the direction we're going.
Yeah, because that is the only way a real estate to be interesting when there are mortgages. That is the only way we can really see boom in the sector, like when there are mortgages, because the current way of people paying out of pocket is not sustainable. It can only go so far because that limits the people that can afford, that can play the sector. Because in reality, like what happens is that the investor who can afford the really high end ones is the same investor that is buying the ones of 10 or 20 million.
That's also true.
Yeah.
Capital will chase the
It's
money.
very, I mean, so you would think it's not, but in reality, the person that's buying um it really high end without naming names is the one that is buying the one that you think is cheap in Moe or it's literally the same person. So a lot of the time for those few group of clients, they're like honey. And everybody's just chasing those few group of clients, and that's not sustainable. However, in developed countries, obviously, it's not to say Nigeria is there yet, we will get there. In developed countries, you put it beautifully. Is that you finish school? I've worked. In fact, I remember one time I was talking to someone, and his friend was laid off in the UK, and he was like, "Oh, he will just sell his house or go and live." I was like, "What?" Like, you can't even fathom the idea of owning a home in your 20s in Nigeria, because how, like, as in assuming you get a job in, let's say, like a bank or a high consulting firm, oil and gas. So, how do you own a home? It's typically out of pocket or a payment plan. You have to get into a scheme, blah, blah, blah. However, if you're abroad, you just get a mortgage.
Well, you still have to qualify abroad.
You still qualify, but still.
Let's not
Simplify it.
handing out homes abroad.
I know. You still qualify.
Around the world, they're seeing those challenges about less affordability of homes because they're also seeing price increases. And I think for Nigeria, we will have that challenge with a ballooning mortgage market. I'm just trying to say it in the sense that like mortgage is not the savior of all here. Because what we're saying is effectively a bank or a financial institution of some sort, or mortgage institution, is going to lend you money to be able to put your name as a owner on this home. Okay, it doesn't necessarily mean you will remain an owner if you default. Economic things change, and that predatory behavior as well on the part of the financier is not impossible as well. And that also, this is not to say we want a strong mortgage market in Nigeria.
We do.
But if and when one comes, there's going to be a boom in prices that we did not see before. Of course, it depends where the source of income will come from, source of funds. Okay. Which brings me back to, my last question about CPN.
Okay.
They're a regulator more than a source of funds, but they're a source of funds for the government when the government wants to raise money by, I guess, issuing bonds, treasury bonds.
Yeah.
Central bank will effectively print money on the back of bonds that the bank have. Yeah, well, no, I like to talk about this stuff. Let's all understand how money gets made, right? So, however, the government have that mandate with the central bank. How can mortgages benefit from that? Is there a way central banks can directly start funding a big mortgage fund?
Man, that question. What I would say is, I don't know that is going to happen in the near future, for a lot of reasons. But I would say that question. So I'm not sure I can answer that question in terms of, okay, this is the approach that they can take because of there are a lot of there are a lot of regulatory
concerns.
constraints maybe
Yes.
to that happening.
Yeah.
But in terms of, I think they can affect the sector.
Yes.
They can affect the sector by touching different areas of the sector in terms of funding those areas. If they can fund those areas for relatively with cheap funds, like if they can bring cheap funds into the system, into the ecosystem, and developers are finding like cheap funds to build, develop, and things like that. People producing cement and stuff like that, or the people in the ecosystem are basically having access to cheap funds, then it could help. It could help the subsector, mortgage subsector, affordability and stuff like that. But in terms of the mortgage bank and funding, I think they
stay out of.
They stay out of that, but they would say they are not completely staying out because there's already something in place for that with the National Housing Fund.
Yes.
Right.
Which is why I've also wondered, there isn't exactly a clear best model, but coming back to Nigerian property, that is the foundation of our real estate market.
Yeah.
If you have a property that's registered, that in effect in another country can be turned into a bond because it's what underlying assets of a mortgage bond. And when it's registered and tied to a mortgage bond that is itself registered, which by the way, I assume mortgages will be registered with central bank or with if your company issues a mortgage loan now, which regulator do you have to notify? Or
so basically what we would then do is notify the lands registry, right, that okay, this particular property is being registered in favor of such and such a person, but there's an interest, right, from the mortgage bank on this particular property. So maybe some form of lien on that property. So really just the lands registry that will notify. And then once that is registered, ideally the title documentation should be in the possession of Federal Mortgage Bank. If they're taking the National Housing Fund, and if they're taking the mortgage from us, we should keep
the custodian.
Yes, custody of that title documents, the original.
And I'm wondering if, as far as again answering that question about the outlook of the market, that policy-wise, countries shouldn't be taking a step from there, saying, okay, this is a formally registered mortgage fund now. Whether it's a loan item or a bond, you can now put a value on it, and we can now put a yield on it, and now that's a financial instrument. Now this bond, whether it be you create a common bond, if we had a developed bond market, can be floated on that bond market. And now the mortgage company, as well as any other investor, can trade mortgage bonds. And then you now have an investor right market that can raise money if you have a property that's, registered as a mortgage bond.
Yeah. So I mean, you just hit the nail on the head with something you said in the middle of that. It's our investment landscape, right, is developing, and I won't say that's a complex investment portfolio, but it is something that we should be working towards too.
Yeah.
Right, because when you have like a subsector like the mortgage subsector in places like America and the UK, these things are being traded, right? Like the mortgage bonds and things like that. But I think that is something that we're also working towards. And I know there's a company that was trying to put that together. I'm trying to remember the name of the company exactly. But I think as Nigerians, I don't think the investment landscape has developed fully, right? For us to have gotten to this place where there's such a wide variety of like investments that can be made and traded on the market and stuff like that. So we're not there yet, but it's a good shout, right? And I think it's something that
Look at as a
to look at, because we've been trying to have some engagement with stock market, CSCS, SEC, and things like that. As to, okay, how can we like really just get into the capital market?
Yeah.
Right. And with these kind of bonds, obviously, there'll be more capital in the sector.
exactly.
Yeah.
And with a bond like that, then central bank or the federal mortgage bank or whichever entity the government wants to use can also influence the mortgage market, the real estate market more directly with interest rates or with finance without having to do it directly or indirectly through.
Exactly.
Right.
One of these days, we'll just see you in, leading the Federal Mortgage Bank, making these reforms, because the truth about it is that we need reforms, and we need to be innovative, right? The development question in Nigeria is not one that can take the natural routes that most of the other countries that became developed can take, but we don't have that time. So there has to be a different way that we are approaching our strategy. So I think we'll get there. We'll get there. We just need ideas like this to actually be pushed to, people that need to hear it. So hopefully, Federal Mortgage Bank, if you're listening, the people that need to make these decisions.
Let me ask one last question then. To come back to our low level, not high policy stuff. The mortgages in the market now. What's your view or experience of the types of homes that people are looking to get into when they apply for mortgages?
Yeah, so I think what also drives mortgages as well as interest rates is the pricing. What the market is saying.
Yes.
We've had a couple of estates that have been sold outrightly through mortgages. So when you look at estates, and I think for people that develop, it's something to really look at, partnering with mortgage institutions to deliver mortgages for your subscribers. So the question really is touching,
which property types are now most popular? I know that it will always be the low end of the market because that's where most applicants.
So we'll say apartments, terraces, maybe semi-detached terraces. A couple of estates, just that we're not marketing any today. That we kind of delivered the estate through mortgages, and they were
feel free to mention.
three-bed semi-detached terraces. Chevron Axis, that kind of, and what's this place opposite Chevron? Orchid Hotel Axis. Orchid Road Axis. So those kind of building types. Apartments, 1 to 3 bed apartments. And then semi-detached terraces.
About how much was the price point on average?
So now we're speaking in terms of some of the stuff that we've done, and there's a huge difference between last year and this year alone. Talk less of some of the mortgages that we gave like 3-4 years ago. So maybe let's try and put it in today's value. Maybe between 35 to 80 million.
80.
Yeah.
Okay. And these are for the regular commercial mortgage or for NHF or hybrid?
Both.
Okay. Interesting.
Right. So people that would be coming for much higher mortgages, maybe well-to-do individuals that need, like I said earlier, maybe a stopgap, or they just need to key into an investment and they need the capital to do that. So there's somewhere for the middle class in the mortgage space as well.
And this any other states in Nigeria that you see spikes besides Lagos?
So the regions or the states that are driving mortgages in Nigeria right now, Lagos, Abuja, Port Harcourt, and maybe one or two places in the southeast.
Okay.
Nasarawa as well,
Oh, really?
because there are a lot of the government is doing a lot of projects there.
Okay.
So there's cheap housing on a mass scale.
Define cheap housing.
Between 10 to 20 million.
Apartment or
Yeah, so like block of flats.
interesting. Interesting.
There's a lot of work going on there,
interesting.
right? In terms of housing, maybe because of proximity to Abuja as well.
Yeah,
right.
yeah.
So that's driving that as well. So we have a lot of people. Maybe I should put it this way: a lot of people in the corporate sector, actually, formal sector, I would say, are the highest beneficiaries for mortgages at the moment.
Yeah.
So bankers, people that work in established companies that from the payroll, they're contributing directly to the National Housing Fund. So somehow they are aware about it. But I would say we have quite a lot of work to do also in the informal sector or in sectors that are not so structured, like the creative space where OJ participates in as well. So there's a lot of work to do, right? And thankfully for opportunities like this, we can actually get the word out about mortgages more.
Okay.
Awesome. Like interest.
So just to bring you home,
okay.
If you want to get a mortgage in Nigeria and the commercial mortgages or stopgaps a bit out of reach, you have the options of the National Housing Fund, the Family Fund.
Family Homes Fund.
And sorry, the Family Homes Fund.
Yeah.
How does one access the Family Homes Fund? As the National Housing Fund, that's straightforward. That's Federal Bank.
Private, right?
So they administer a lot of their loans through the primary mortgage institution. So any mortgage bank that has a relationship with them can actually administer these loans. So Citico is one, and a lot of other mortgage banks that are keen into the Family Homes Fund as well. Yeah.
Is the government involved in this at all?
It's a private company.
Private company.
It's a private company. But there will always be
only as
government
much as licensing
intervention.
regulation.
Yeah.
Okay.
Yes.
Who regulates them? CBN?
I would confirm. Confirm. I'm not too sure who regulates them.
All right, then. That brings us to the end of episode 3.
Thank you.
Thank you so much, Tarela.
Thank you for having me.
So anybody that wants a mortgage, thank you so much. Thank you.
Thank you.